United States. Jeff, it was interesting having a look through the MoneyWeb archives. The first time you were on this program was way back in July 2002. At the time, the gold price was, well, it had just picked up from $260 an ounce. And you were saying we could be into a long-term bull cycle. Man, how right you were. Hope you stocked up on gold shares.
I did, gold shares and gold and other golden assets, yeah.
And then we've spoken through the years and had a couple of times last year that, in fact, you were in the studio as well last year. But today's an auspicious day for gold. $60 jump on craziness that seems to be happening on the fiscal side in America.
Well, I don't know that I don't know to what extent the monetary policy announcements yesterday actually were affecting it. I'm sure there was some, because people were looking at it and saying this could be extremely inflationary. I'm not convinced that it is, but I think that what we've been saying that we thought the gold price could reach a new record this month or by early April. And that was not based on our expectation that Bernanke would say what he said. It was based on the fact that people around the world are buying tremendous amounts of physical gold, unleveraged gold, direct access to gold. They're buying it because they're worried about a host of financial and economic problems. And on top of that, you have a lot of what we call congestion in the April COMEX contract, which has to be resolved between now and April.
What is that?
Well, basically, you have open interest in the April futures contract. It's down to about 18 or 19 million ounces. It was 24 million ounces this time last week. So they're starting to roll it out, and that's shorts and longs. And you have about 2 million ounces of gold in the depositories registered to deliver into that. That tells you that anybody who's short the April contract either has to deliver gold or buy their shorts back, or roll them. What they'll do is actually roll them forward. And all three of those processes have the effect of pushing prices up sharply for a short period of time.
So even for people who are just holding their Krugerrands and don't really understand futures markets, these are good things as far as their Krugerrand values are concerned.
Exactly, yes.
And where do you see it going once that's out of the way?
Well, okay, I think, like I said, we wouldn't be surprised to see the gold price set a new record in the next, say, 4 weeks. Then I think it comes down, because quite frankly, I think during the second and third quarters, and especially after Bernanke's announcement yesterday, in the second and third quarters, I think that we will see a growing perception or belief that the economic recession is bottoming out. We may actually start seeing some thawing in the credit markets worldwide, and there could be a view that, okay, we maybe are bottoming out economically, and we are moving toward what could be the beginning of an economic recovery. In that environment, I think gold could go down possibly as low as 800 or 850 in the second and third quarters before moving back up toward the end of the year.
What you've just said now is a very optimistic scenario for many people who've been really scared stiff that we could be going back into the Great Depression. Is it reality?
The depression or
recovery? No, the fact that we are going to recover.
Well, we recovered even from the Great Depression. Economies do spring back. The question is, are we in the midst of a 24-month recession to be followed by a economic recovery, or does this thing devolve into a bigger, maybe even a depression? And one of the things that we've done in the last few weeks is our main scenario is still that we see a bottoming out in the first half of this year and the beginnings of a move toward a recovery in the second half of the year. But we have increased the probability rating for our tertiary scenario, economic scenario, which is a much more severe depression-like economic outlook.
People like Nouriel Roubini, who have been incredibly accurate over the most recent past, guys like David, the guy from Morgan Stanley, Stephen Roach.
Yeah.
These people who have been extremely bearish and think that it's going to get even worse from now onwards would have a different perspective. Why is it that you're feeling confident that the economy could actually pull up?
Well, I think there's a variety of things. First off, recessions do end and recoveries do begin. Second thing is that the Treasury and the Fed have a tremendous amount of firepower left in their arsenal, and they have shown that at this point they understand that there's no reason to hold back on it. In addition to that, monetary authorities and governments around the world have shown the same propensity, and in fact you're seeing a much more effective stimulus program emerging more quickly in China.
But Jeff, they're creating money. Surely that's all going to be inflationary somewhere down the line, and hopefully good for gold.
If we have time, I can walk you through it. will be inflationary, but it may not be hyperinflationary. And what I would say as a shorthand is if you look at the situation in 1982-83. In 1982, we were in the depth of what was then the deepest recession since the Great Depression. And we went into the international debt crisis where Argentina, Brazil, and Mexico were about to default. Volcker convened the central bankers of the world for an emergency meeting in July of 1982 and said, we have to flood the world and reflate us our way out of this, which they did. Now, gold had dropped from $850 in the beginning of 1980 to $290 in July of 1982. By December, they had reflated us out of the recovery. Economic activity was picking up sharply around the world. Gold had gone to $500 because everybody was convinced that this was hyperinflationary. Once we got into 1983 and you saw that we were in a recovery, they sold bonds and sucked all those dollars out of the economy. And you got into a 25-year period of some of the lowest and most stable inflation in the United States. Now, let me just say that one last thing. If you look at broad money supply growth in the 1982 scenario, it was 38%. If you look at broad money supply in the current scenario, it's about 10 or 15%. This is nothing compared to what they did back then.
Well, history then on the side of no Armageddon around the corner. That was CPM's Jeff Christian in the studio with us from New York.
Gold Fields brings gold to the world. We are a truly global company, providing global investors with unparalleled returns in an unparalleled commodity. We are driven by our success, and we are committed to continue giving our shareholders the gains they have come to expect, both in share price growth and dividend yield. And we, in turn, offer our investors gold in its pure, unhedged form. Goldfields.
Well, fascinating insights there, David. And it would support the turnarounds in the stock markets.
Yeah. Well, for some time, I hope we don't see that 800, 850 for the second half of the year.
The SAFM Market Update with MoneyWeb was brought to you by the Escalator Funds from Discovery Invest. Lock in the ups and don't worry about the downs because your success is inevitable with Discovery Invest. Discovery is an authorized financial services provider. We're back again, same time, same place tomorrow. It's exactly 6:30 and time for Game Plan.